Hello everyone, this is Pick. I hope you can hear me. So today I am on vertical video. So I will. It is better. It's a vertical to show you. I trade on this platform MT5, the Android application. So it's better to show you right here, okay, other than showing you on my computer. So because I can show you the trades that I took, I can show you everything. So right here, what you are seeing is crude oil. This is oil, US oil. So it's crazy. So let me show you the trades that I missed here. Of course, it is gonna be a missed trade. So as you can see, my my thought was I was gonna leave this thing alone because as you can see, TP3 is hit right here. You can see it here. Right there, okay, right there TP3 is hit right here and the TP3. So as you know, on the black box terms, the black box's principle, if the price hits TP3, then that black box will be done. It will be done for the day. Okay, it is not proven. It's not yet proven. It is just the things I have seen that the price is doing. Okay, the price is doing these kinds of things. And so the idea started. Um, I was going to use the previous black boxes. Okay, the idea was to eliminate or to finish the previous black boxes before using the new one. Okay, that was the idea. So now what happened here is TP3 hit and look what happened. The price just melted, right? Let me show you. Look at this. TP3 I didn't measure it correctly, so as you can see. Uh, yeah, close. I think it is close. Let me put it here. So when you measure a two candles black box, what you're gonna do is you're gonna use the bodies. Okay, you're gonna use the bodies. You don't use the wicks. These wicks, no. You're gonna use the bodies. See right here to here when you are projecting your take profit. So this will be TP1, this will be TP2, this will be TP3. Okay, Fibonacci is TP3. So you need only the Fibonacci uh, extension and the rectangle. You don't need no more. You don't need nothing more. Okay, this is it. That's it. So as you can see, nearly TP3 hit. So that was the thing that made me miss this trade. So I could have bought this thing right here when the price was trading down there, right here. So right there is this right here. Okay, let me move this to the left. So as you can see, the price, I mean this place right here where your black box is located is called what? The silver zone. It is called the silver zone. Okay. It is called the silver zone. What does that mean? It means it is risk-wise. Risk-wise, it is risky. It is risky. It is a risky place to take a trade, but it is a high probable place to take a trade. Okay, there is a high probability that the trade will turn out to be right. Okay, there is a high probability because this is a black box zone. This is an area of interest. This is an area of interest. So when you are using this, you are in the right direction, okay, with the market. So this is called what? The silver zone. This is the silver zone. You can use S to symbolize it. And the area below the black box, if you are buying like this one, okay, the area below the black box from this to your stop loss, including the 5%, is called what? The golden zone. It is called the golden zone or the golden area. It is called the golden area. Okay. What does that mean? It means that you have less risk. Why? Because your stop loss will be tight. If the price comes down here, your stop loss is tight. Your reward will be huge. Your reward will be from here to there. What about your stop loss? Your stop loss is from here to here. Okay, it could be 1, 2, 3. It could be 1, 2, 4. Right? The risk to reward. Okay. So any price that is in the golden zone or in the golden area is a high probability. Next to the silver zone, it is highly probable that the price will go in your direction. Okay, because this area is very oversold. This area is very oversold, or it is very discounted area. It is very discounted area, which means the institutions or the hedge funds, huge, yeah, these big players, these informed traders, what they are doing is they are bringing the price down, right? So they are going to sell for willing buyers. Okay, they are going to right here. I'm sorry, they are going to buy from the willing sellers because there are trapped sellers here. Okay, so they will be buying from here, from the discount area, from the cheapest area down here, not up here. Okay, buying from here and down here, there is a difference. There is a big difference between it. Okay, there is a big difference. Right here is 80.9, as you can see, $80.90 right here, right? That's what it reads. Down there is 80.60. The difference is 30, right? 30 means when you multiply it with millions of orders, it is gonna be huge. It is gonna be huge. So even if you assume 1 million orders, it is gonna be 30 million. 13 million investment, I mean 13 million liquidity. Okay, 13 million. I mean it can be millions of dollars, it can be thousands of dollars, so no one knows about that, but you can multiply that with that 13. Okay, that's the difference. That is the difference between this price and the lowest price to the highest price. Okay, between this the black box, okay. So when you are buying at the golden zone, you are basically buying at the cheapest price possible. Cheapest. You are the only one who knows this. You are the only one who knows this. If you trade the black box or if you are studying the black box, you are the only one who knows this. Okay? When people see this right here, when the price comes down, they're gonna see this as a break of structure. They're gonna see this as a break of structure, and they're gonna sell this. Okay? So you can see here what happened here, right here. The break of structure, right? Down here. So they are selling. They are selling. What about us? We do not sell. We do not sell. Why? Because the black box is right here. The black box is right here. And what happened? The tip is, I mean, 5% is not touched yet. Nothing. The 5% is not broken. How do I know that? Because, let me bring this up, because when you zoom in, what did the price do here? Right here. So you gotta see the red candle right here. This one, the bigger one, the red candle, the first candle. Okay, this is the lowest candle, right? So in terms of length and in terms of height, this is the lowest and the highest, right? It encompasses both of them. It is like uh, an engulfing. It is not an engulfing actually because it is before the candles. Okay, uh, you can study candlestick patterns, but we don't need this. Okay, so this is the lowest one. What does that mean? We have to count. So this lowest price, what did it do? It broke this one, right? I am using this bar, I mean this grid. As you can see, if you notice, we have a grid, right? This is a grid. This is a grid, right? So the grid increment is 20 units. As you can see, from 50 to 70, how much do we have? We have 20, right? Then 70 to 90, we have 20. 90 to 10, I mean 110, we have 90. 10 to 30, we have, 20, I'm sorry. Then 30 to 50, we have 20. 50 to 70, we have 20. So this grid is a difference of 20 units, right? 20 units. So this law, right? Let me zoom in. This law, what did it do? This law broke the grid, the 20 unit grid. But right now, since I zoomed in, the difference now changed. By how much? By 15. Now it is less. Why? Because I zoomed in. If I zoom out, what is gonna happen is it is gonna be huge. Why? Because I zoomed out. Okay, now there is a 20 unit difference. So that candle broke down, right? It broke down. So we need to see the breaking candle, alright? The breaking candle to break that grid also. Why? Because the black box broke the grid, and this candle, the breaking candle, didn't break the grid. What does that mean? The 5% is not touched, bro. The 5% is still intact. So no action on our side. We're not gonna take no action. We're gonna wait. Now what happened? Now what happened? We have to wait until the lower grid is broken. Why? Because this candle changed everything. This candle changed everything. What does that mean? Now the 5% extends to the lower grid. Okay? Now the black box is this one. This one. It includes this all of them right here. Let me let me clear this. Let me clear this. So now the black box includes what? This one. Okay? This whole thing. The new candle and the previous candles. All of them. So those have to be broken for it for us to sell. For us to sell. Otherwise there is no sale, bro. There is no sale. Then what happened here? But other traders are they gonna see this as a break of strategy. When you go to a 15-minute time frame, when you go to a 15-minute time frame, and when you see this, it is gonna be like this one. Low and then high is coming from there, from up there, right? Then what happened? This thing, this candle broke this one, right? I can show you by entering the 15 minutes. So this law is broken. What does that mean? This means a change of character. Change of character, right? So it did indeed. In fact, it went down. In fact, it went down. Okay. So what happened here is it in fact went down, right? So what does that mean? They sold. They sold and they were right now. For now, they were right. Okay. For now, they were right. Why? Because it moved into their direction. What happened? It immediately retraced back. That's not our business. What our business is the 5% gone? No. What about now? No. Why? It didn't break the lower grid. What happens now? Now the 5% is this whole thing. This whole thing. Now it extends down to, okay? When you zoom out like this, it is gonna be like this one. Okay. What happened here, bro? So crazy, bro. Let me put this thing, this man around there. So now our black box is this one. Okay. Okay. Our black box is this one. If you want to go surgical, or if you want to trade the inside black boxes, you can do that. You can do that. In fact, I encourage you to do that. Okay. It is less. Yeah. It occurs more. I mean, it is frequent. It is more frequent. It's more frequent. What does that mean? It is gonna form most of the time. It will form frequently. Okay. So what you gonna do now? What you gonna do now? You gonna point to this black box, right? What do you do now? You say you have sold this one. I am showing you everything, every black box that I am seeing in my view. Right here also. Right here was a sale too. Okay, every black box. This is a bigger black box, but now you're gonna focus on this black box, right? Okay, what do? You say, what happened? Is TP3 hit? You're gonna measure this. You use a Fibonacci from down there to up there. What happened? TP2. Look at that. Look at this and tell me something. Look, TP2 nailed. Look at that. That precision is out of this world, bro. It is out of this world, bro. Look at that. TP2 nailed, and look what happened. So, if you, let me show you something. I have saved a note here. I usually save a note here. So I'm showing you everything, every process that I am using. Okay, so you can see it here. Let me show you. Uh, so right here are everything that I noticed. I will write it here and I will prove it. Okay. Okay. Where was it? What was the thing that I wanted? Yes, TP2 or TP3. Yeah, exactly. Look at this. The force model happens because there is undelivered TP2 or TP3 black box before it. Okay, this is untested. It is still a theory. It is still a theory, so don't take this as a rock solid rule. It is not a rule. It is untested. This whole thing is untested. Look at this. Look at this. I wanted to show you something. TP2 and TP3, right? So, and deliver TP2 or TP3. So what happened here is the price can reverse from TP2. Okay, that's the problem. That's the problem. So what you're gonna do is, as soon as the price hits that TP2, what you're gonna do is you're gonna trail it at break even. You're gonna trail it at break even if you are risk conservative, which means if your risk is more, do not risk more. I'm telling you, please, 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 I'm begging you, don't risk more. I have learned my lessons, so don't make any mistake. I mean, don't risk more, okay? Risk less and make more, okay? So what you're gonna do is you're gonna trail to your entry. So your entry would be where? Where? Where would your entry be right here? So this thing is between, as you can see, the 5% is broken for this one. This kind of black box is between this one and this one, right? Between this one and the full, right? So what does that mean? When that thing breaks, I am entering. I am entering a trade. I am entering a trade. Where is my stop loss? My stop loss will be up there as the 5%. Where is the 5%? The 5% is the same as it is the same as below the black box and above the black box is the same. Right here. Right here, okay? Right here. So what happened here? So what happened here? We were in profit. We were in profit, right? We were in profit, so finally the price lifted up, changed direction. So TP2, after hitting TP2, it changed direction, right? It changed direction. So what does that mean? It means that if we trailed our stop loss, then we will be out of the trade. We will be out of the trade. Okay? We didn't lose nothing. Maybe a transaction cost, maybe transaction cost, right? From the brokers, right? So that may be the cost, right? That we paid, but we didn't lose money. We might lose some uh, execution cost, right? Execution cost. You already know that there is an execution cost. So right, it turned direction. It went to our direction again. So that's why I tell people. That's why I tell people to wait until the market hits their stop loss or until it hits their TP3. Moves to their TP3 and more. Okay. So in this case, what happened is gonna be a long video, people. So wrap your seats and take out your notes and follow me, right? Follow me. So what I was talking here was, so you gotta put your stop loss up there. So this market could trigger you out of the trade. If you are risk conservative, which means if you don't want to risk your money, what you're gonna do is after entry, after the profit has, after the price has hit your take profit, TP2, TP2 is the triggering point, right? As you can see here. After TP2, you're gonna trail it at break even. Okay, if you don't want to pay the commission, the trading commission, you're gonna trade it where? Down there and until the money covers your position. Your commission, trading commission. So that's what you're gonna do. But if you want to hold for more money, then you're gonna have to risk your money, less of your money. Okay, you're gonna have to risk your money. So what happened? The inevitable happened, the third model. So what does the third model say? The third model says that this is the thing, then we break the downside and then we break the upside. This is the third model. It's easy and simple, clean. Clean. There is nothing more. Look at that. So what happened here? This thing, this price, oil, what happened here? It broke. It broke what? Your stop loss hit, 5% broken, everything satisfied. Now what do? You buy You buy here small percentage, one third of your position will be here. You buy right here at the break. Why? Because it is risky. We have the force model, okay? We have the force model. Don't forget that. We have the force model. So you don't put your money on the third model, all of your money. Don't do that. One third will be what? At the break of the 5%. The other two-thirds will be at the silver zone. If it is close, if your stop loss is close, the area between your stop loss and the silver zone is close. Okay? Two-thirds will be entered, the remaining. If the price enters the golden zone, that is even amazing. That is even beautiful. It is beautiful. Why? Because your stop loss will be tight. It will be very tight. There are trades that I count those kinds of trades. There are situations where I caught those kinds of trades, bro. It is just crazy. It's just crazy. Stop loss down there, and my entry was up there, just like this. And my TP was nowhere close. It was like 1 to 6 or something. It's just crazy. It's just crazy. And it didn't even reach that one tick. My stop. I know my setup, so that's why the price didn't even touched my stop loss. Didn't even come near. It didn't. It went to uh, my TP straight. So I think it was pound card or something. So right, what you're gonna do is you're gonna enter one third at 5% and the rest, the two third at the golden zone. Preferably, it is preferable. If you are entering at the silver zone, which means at the black box, the the risk to reward has to be small. Okay, the risk has to be small and the reward has to be large. What does that mean? What does that mean? What does that mean? That means, let me show you. Let me show you. Let us say the price broke this eye right here, this black box right here. The price broke. And if the price comes back here, this is what? This is the silver zone for this black box, right? This is the silver zone. So what do? I see if it satisfies if it satisfies my risk. My risk. Okay. If my risk is satisfied, alright? If my money is in it, right? So you see the hate. So my stop loss will be where? Down there, bro. My stop loss will be where? Exactly down there. Why? It has to accommodate the 5%, bro. Don't forget that. It has to accommodate the 5%. So if I enter at the silver zone, so look at this. My stop loss is from there up there to down there. And my TP, if my TP is up there, then it is gonna be 1 to 1. That's not good. That's not good. So what do I do now? What I'm going to do is I'm gonna wait until the price comes down there, right here, okay, right there down. This is what is this called? This place is called the golden zone. Why? Because your stop loss is tight, your reward is huge, bro. It is huge. That's why it is called the golden zone. Okay, the golden zone. So what you're gonna do is you're gonna wait until the price comes back to the golden zone, or you're gonna see if the stop loss to your entry is small. Otherwise, don't enter a trade. I urge you to wait. Wait. Patience is one of trading psychology. It is one of important trading skill that you need to develop. Patience. Patience is important. Okay, don't forget that. Don't forget that. So that's another valuable lesson right here. So let me come here. So this was my setup. It was today in the morning at local time at 4 or 2 o'clock. At 4 o'clock, I think. Yeah, it is at 4 o'clock. So what happened? Right here, what happened was I was watching this thing. I was watching this thing, and I was watching this support this, bro. But not in order to not risk my money, in order not to place my stop loss down there. Because if I enter up there, then to down there, I was waiting for the price to come to the golden zone, bro. That's why I am telling you that the silver zone is a higher probability area. The silver zone is the highest probability area that the price is gonna return. Reverse direction, okay? Reverse direction. So because of my greediness, I lost this much money, bro. Because I didn't lose this money, but I missed. I missed as a better word. I missed this much, bro. It is nuts. Look, my stop loss down there, my entry up there. Look, look. How much is the risk to reward? This one. Can you calculate? Can you calculate this risk to reward? It is gonna be one, two, I mean two, three, four. It is five. 1 to 5, bro. It is 1 to 5, bro. It is 1 to 5. It is nuts. And it is oil, bro. It is oil. It is not euro dollar. It is oil, bro. It's gonna be a lot of money, bro. No joke, bro. Commodities, gold, oil, silver, bro. They are nuts. They are nuts. They move like crazy, and they pay like crazy, bro. They pay like crazy, bro. Jesus Christ, look, this is amazing. The other thing that made me abandon this setup is this one, the TP3. When I measured it correctly, look, the TP3 was not hit, bro. Jesus Christ. The TP3 was not hit. Look, look, look. I should have entered the buy down there, but I missed it. So look at that. That's just crazy. Anyways, this is all. Let's go to euro dollar. That let me show you the trade that I took on euro dollar. The same thing, and nothing to it. So first thing, I lost money. I'm not gonna lie. Why? Because I sold. Why? Why would I say this? Because it is the second model, bro. We trade the second model, we trade the first model, we trade the third model. The model that we don't trade is the fourth. Why? The fourth one is not good. Let me show you. This is the fourth one, right? Simple as that. This is the fourth one, right? What happened here? We sold. 5% broken, everything broken. Why? This thing stopped at halfway between these grids, the upper and the lower grids. And this thing, what did it do? It moved down, bro. It moved down. It moved down. It sold. After selling, this thing bought again, bro. This thing bought again. So, in fact, If I was buying this thing is with a third model, what I'm gonna do is I'm gonna wait until this thing comes down here. Down here. This is called the golden zone. This golden zone. My stop loss down there. I'm gonna buy this one. So if the price triggers me out of the trade, it is gonna be less money. Not a lot of money. I will not lose a lot of money because I know my setup, bro. I move strategically. So what happened here is a force model anyways. So let me show you. Bam. This is three candles in a row. That is the fundamental definition of the black box. Three candles in a row is a fundamental definition. Don't forget that. So what happened? Sold, bought, sold again, sold again. So how do you trade the force model, bro? Is there any way? Is there any way? Is there any way to trade the force model? Show me. If there is any way, bro, I'm gonna accept it. I'm gonna accept it. Look what happened. You might consider selling up there, that because that is a golden zone for the force model, right? You might consider selling up there, and that is a supply zone too. That's a shorting area. So you're gonna short it. Look what happened. You are done. You are done. You are done. So instead of trading the false model, we're gonna trade on the new black box right here. I was watching this one yesterday, and I missed this one. So what you gonna do, bro? What you gonna do? You're not gonna do nothing. You don't do nothing, bro. You don't do nothing. You missed this, and you gonna kick yourself all day, bro. It's just crazy. So what I was telling you is the setup. Let me show you the setup. So the setup here, I sold it. Then my stop loss is up there. Why? Up there. Right there at the grid. Why? Because this candle stopped at the grid. So my stop loss has to be at the grid. Typically, technically, it has to be one tick or 1 point above the grid. Why? Because the price can still come and touch that grid and make equal highs like this one and return back. Technically, we didn't break any 5%. Why? Because we just touched it. We didn't break. We have to move 1 point up. We have to break it. That is a key word. The 5% has to be broken, not touched. If it is touched, that is not broken, bro. It is still intact, bro. So if the price comes back down, don't blame me, bro. The 5% is not broken. So the 5% has to be broken. So what does that mean? I don't put my stop loss at the grid. I put my stop loss 1 point above the grid. What does that mean? 91.11. Okay? 91.11. Okay? There is another problem here. A spread. It's a spread. If the broker you are trading has a wide spread, it is gonna take you out of the trade. It doesn't matter if you place your stop loss, like I told you. So what do you gonna do in that case? What you gonna do is you gonna you gonna move your stop loss above, so the spread cannot take you out of the trade. Okay, okay. The spread cannot take you out of the trade. So you're gonna make a space. Okay, that's another topic here. So I put my stop loss up there above the grid a little bit, and then this price inevitably got out of the trade. So immediately I knew that I was gonna enter a buy. I know how to trade the third model. So this thing sold, and this thing what did it? It bought. It bought. Okay. So I bought here small portion, and the next portion at the retest down there at the retest right there. So sometimes what is gonna happen is sometimes the price might continue trading up, okay, without supporting. So in that case, you're gonna miss money. So in that case, that is why I told you to enter 1/3 of your position. So 1/3 will at least be trading up, trading with the market, okay? Instead of missing out, instead of waiting for the price to retest the silver zone or even the golden zone, which happens less of a time. Why? Because the silver zone is the one that is a high probability area. That is a silver zone, bro. It is a silver zone, bro. It is a gate. It is a gate. So that is a balance. It shows a balance between the buyers and sellers. This is an area of control. It's point of control. It's a POC. What does that mean? It means favorable. It is a favorable place for both of the for both the sellers and for the buyers. It's a good place. What does that mean? When the price comes here, it will be reacted. How? It might bounce off, or if it breaks down, it might break down and support and move down. That is the reasoning. So I bought that thing. So when I came back and checked this, it was trading up there. So I was in a huge profit. That was amazing. Okay, so the time is almost 35 and your attention is going nuts now. It is understandable. It is euro dollar, by the way. If I am covering this, let me put myself down there. So that is euro dollar riser. That's the typical third model. Simple as that. I mean, oil, it is the same thing. As typical chart model, simple as that. The other thing that you should consider is trade the new black box. Okay, when new black boxes form, you have to trade them. Don't wait for this one. Don't wait for this one. Draw this and waiting for this to hit and then selling. No, don't do that. Don't do that. I'm done doing that, bro. I am done, bro. And that is no good. Look what I did. After profiting from here, I put my stop loss down there, and unfortunately, it got me out of the trade. Okay, I shouldn't have done that but I was so greedy, so I have to work on that. Okay, I am so greedy, so I have to work on that skill. So immediately, what did I do? I immediately made the black. I immediately painted the black box here. Okay, immediately when my mind tells me when I say black box, when I see three, uh, let me decrease this. When I see three candles in a row, I immediately touch the box sign. Okay, the box right here, the box sign, and I immediately draw over it. Right, just like this one. Why? Because I use it to trade. I use it to make money. It is making me money. So you should use this too. So that's what you're gonna do. So you're gonna trade the new one. Okay, you're gonna trade the new one. Don't wait for this one. Don't wait for this one for the price to come down. No, don't. The other thing is to never trade below the 1 hour time frame. Don't do it. Don't do it, bro. I tried everything from 5 minutes to 10 minutes. Look. I had a 5 minute. I deleted it. Now it is 10 minutes, 15 minutes, and 30 minutes. Okay. I tried the 10 minute. I tried the 15 minute. I tried the 13 minute. I mean the 30 minute. Now I am back to 1 hour. Okay. The time frames below 1 hour, they are crazy. They are crazy. They are chaotic, bro. They are chaotic. They are fast. And they will make a lot of force model. And you don't want to involve yourself with that, bro. They will make a lot of force model. Okay. So you don't want to get involved with that. Okay. And 1 hour is enough. It delivers good. Look at that. Look at that sale. If I trade that thing, that's a beautiful sale, bro. And look at right there. That was a sell and a buy. That's just amazing. There's not a lot. Why? Because we are still moving down. So I was I mean testing this one. If the previous black boxes that didn't deliver, which means the previous black box that didn't hit typically have any value or anything to do with what the price is doing now. So I was testing that one out earlier today. And look at that, I measured from the body to the body. Why? From the body to the body. As you can see, this thing, I thought this is a two candles black box, but it is not a two candles black box, as you can see. So I'm gonna extend this one. Let me extend this one to up. Why? because it is not a two candles black box. And look, now it came to straight. So now it is straight. What happened here? After hitting TP2, price retraced back up. I mean TP3, I'm sorry. TP1, TP1, TP2, then TP3, right? Right here. So what happened here? So every black box here was contributing to the price to move down to this one's TP3. So I am studying this thing. So when I find something concrete, I'm gonna tell you right away. When I find something concrete, I'll tell you right away. Okay? This is just a theory, and I am trying to make sense of it. Okay? It doesn't make sense right now. I'm trying to make sense of it. Look at that. That delivery is out of this world. It is like something is not right here, bro. So, like the price is predetermined. Like the price is just knows where it is going. It is not random. Something like that. It's telling you something like the price is not random, bro. You gotta know how to trade it. You gotta know how it moves. You gotta know how it ticks. So you can predict what's gonna happen next. Okay, because you already know what it's gonna do. What does that mean? It means you have an advantage that you know what it is gonna do. Which means you can put whatever money amount you want on that trade because you know it for sure what's gonna happen, right? At least you know 90% to 80% that is exactly what's gonna happen. Like what we are doing here, okay? From every black box around here, every black box around here, the force model happened only one time. Here, look at that. This is a force model right here. This is a force model right. This is the one that happened one time, a single time. It never happened again. What does that mean? It means that we have hope. It means that we have hope. We are gonna make money. Bro. That is just an amazing news for us, bro. An amazing, huge news for us. For people who are seeing this one as for the model, no, it is not. Why? Because this is a two candles black box. There is a difference. This is a two candles black box right here, okay? Right here, when you zoom in, what happened here? So we trade it here, we trade it here, then this candle broke. So now the black box extended up this one. Now the black box is which one? So holding. This holding is a black box right there. Okay, this holding. So right there is a buy. Right there is a buy. Okay, that is a two-way candle. I mean black box, a two candles black box. That's called a two candles black box. And we have a normal one that is three or more candles in a row. That is normal. Okay, look at that. The same thing here. Look at that. Two candles black box. Look. Let me zoom in for you. Look at that. Two candles black box. This one broke, but this thing covered the body, which means this is holding the black box right. Okay. So you're gonna buy this thing up there. You're gonna buy this thing up there. Okay. So this is it. This is what I wanted to show you. So hopefully you got some idea. You got some also some confusions too. So it is also getting dark. So it's gonna be hard for me to show you here. So next I'll show you on my computer of the trades that I'm taking. I'm trying to raise a 20 something dollar account and show you how the black box is performing. So I did raise the account to 33 or something dollar, the $22 account to 33 or something dollar, almost 50%, right? 50%. I think it is 50% return. Yeah, something 50% return. So if you want to check the results, don't just listen to what I am saying. Watch the results. Where are the results? Pick where are the results. So you're gonna go to You're gonna go to Forex, my FX book. Okay, I have linked the account there, my FX book. You can check the progress here. Okay, you can check the progress here. If I made money, if I lost money. Okay, and every trade I took, every stop loss I placed, everything I did is right here. You can check it out. Okay, the chart and the progress bar. If I am positive or if I am negative, if I am making money or if I am losing money, if I am in a red zone or if I am in a green zone or a blue zone. Okay, you can watch everything live. I'm not gonna delay that. That is for a steady purpose. I'm not gonna use the money for my own sake because it's gonna take a long time to raise that to $100 and $500 and $1,000 is gonna take a lot of time. So that is just for demonstration. I will show you how the black box performs. Okay, and you're gonna see that. Okay, I have actually raised it to 50% return. You can see it on my FX book. On my FX book, you can search the black box. Okay, that is my only profile here. When you search the black box, you're gonna see my face. You're gonna see my profile picture there, and you're gonna immediately know that that's my page. Okay, I have a page on my FX book. You can check that out. Check the progress of uh, the account. Okay, and then I'm not just talking. I am doing work. Okay, I'm proving to you time to time that it works. It works. The same thing here. I was gonna buy this one, but the broker didn't allow me because I don't know. For some reason, they say that the minimum threshold reached or the limit balance not enough or something like that. It's just crazy, bro. I would have made $12 or something from this one, from one micro lot. It is from 0.01. That is the lowest. That is the lowest you can go. The lowest leverage 0.01. That's one micro because it is a 20 something dollar account, so I am trading on a micro. Because if you go to one mini lot and if you go to one lot with that $22 account, you're gonna blow within a second. So I don't want that to happen. That's for demonstration purposes. So go search the black box and you're gonna get the charts. Okay, you'll get the data every trade I made. Okay, I made $5 on dollar share. I have lost $2 or $3 on GJ, and I have lost I don't know $4 on US 30 because I mean trading psychology, bro. Trading psychology, I am not still a pro. I didn't master everything. Okay, trading psychology still I am 50%. I still use my setups, but when managing a trade, I get out early. I get out early sometimes. And let me show you the trade on pound dollar that I missed, the trade that I missed, bro. Right here was a buy. Look at that buy. It was earlier in the morning and I missed it. And the trade I missed it is down here. Let me show you. What was it? That's not it. It is around. Yeah, it is around. It is still intact. It is still here. Right at the start of the trend. This trend I bought. Yeah. It is this one. It is this one. It is this one. So right here, what happened was, look, I bought this one. I bought this one. Right there, I got out. Greedy. I got greedy and I got out. What if it returns back and hit my stop loss down there? So that thought came to my mind, and I immediately got out once that week made that kind of rejection. Look at that. So candlestick patterns tell you that when you see that one, that is a reversal sign, right? No, it is not. No, it is not. Sometimes it is, but not always. So as you can see, If I was a candlestick trader, then I would have missed this whole thing. I mean, I did miss the profit, but look at that, bro. And the other thing is, I missed this whole look. If I had, I mean, accumulated, if I had waited until, look at that, look at this move, a lot of move, bro. Look at this move, bro. Look at this, bro. It's so great. Let me zoom out for you, bro. Look at that. That is the trade right here. I bought that right at the start of the trend. And look at that. I missed this whole move right here. From down there to up there. And mind you, this is a 1 hour candle, bro. It is not a 1 minute candle. It's 1 hour candle. What does that mean? It means the numbers are gonna increase. The numbers will increase. The pips will be huge, bro. I don't know. It is gonna be 200 pips or something. Pound dollar, bro, appreciated like crazy. So it is crazy. So this is it. This is another regret that I had. So I will see you next time. Okay. So it's getting dark. It is getting dark, and I gotta do some work. So I'll see you next time. So thank you for watching. I'll catch you in the next one. So peace out.